Hey everyone, I am Nash Middleman here. Welcome to the House Blend, a Bay Area real estate podcast. And this is the Affordability series. I got my friend Stephen Klein from Greystone Insurance Agency here. And today we're going to be talking about affordability because that is one of the big questions that's coming up quite a lot in prospective home buyers. And Stephen, I love that you're here because insurance is a big topic right now in the real estate industry, and I don't think that's going to be changing anytime soon. So, welcome, and thanks again for taking the time on this Monday evening. I know you're super busy. Um, Also, want to say I know you got a lot going on with the fires down in LA, and thinking of you guys and praying for everybody affected. I know you had some clients that were also affected, and just want to let you know that we're thinking about you.
Thanks,
So
Ash. Thanks for having me. Good to see you.
yeah, likewise. Um, on a lighter note, are you a coffee drinker?
Oh yeah, love that stuff.
Awesome. How many cups a day would you say you consume on a regular basis?
Not too many. Probably two or three cups that are each two or three cups. So six to nine cups. I'm
That's
into
the industry standard. Yeah.
yeah. I mean, coffee's good.
Tell me about just real quick because for anyone listening, it's like 6 o'clock here. We both had busy days and we're not drinking coffee at 6 o'clock. But what's your home coffee program look like?
I like pour overs at home. Nice light roast. Control the quantity of the beans. I'm really burned out on just burned up dark roast beans. It's just not a good flavor anymore. So we do
Touche.
pour overs over at the Klein house. But
Love it, dude.
when I'm traveling, it's usually a dirty hot chai.
Nice. Okay. So I was in Bali a few years ago, and I took this pour over class, I guess you can call it. But well, one thing the guy said is like the type of coffee that you drink comes through your personality. So if you drink like a flowery roast, then you're going to be a nicer person versus like a dark bitter roast. You'll be a dark bitter person. So I see that in your personality, and you know, just wanted to let you know
Yeah,
that you are definitely a light roast guy.
sounds like there's a direct correlation between me getting burned out on dark roasts and gravitating to the light roast, huh?
There you go. It all makes sense now.
Hilarious.
All right, man. Nonetheless, insurance. So, can you just tell people, like, give yourself a little introduction? How long you been in the game?
So I'm the managing partner of the Greystone Insurance Agency. We are an independent insurance agency located in Southern California, but we have clients all throughout the state. But we're an independent brokerage, so we work with the insurance companies that are still writing new business in California. And compared to a couple of years ago, there's much fewer options available now.
Yeah.
But our job very specifically is to know which insurance companies are still writing new business for the various communities that we support. We're a full service property and casualty insurance agency. So we do personal lines. So we help individuals with home, auto, umbrella, earthquake, flood, landlord, and renters insurance. We have a very robust commercial insurance practice as well. So that's general liability, workers' comp, employment practices liability, cyber liability, product liability. We're industry agnostic. We've got clients from Main Street to Wall Street. We do all kinds of funky stuff in between. That's really where my specialty lies. I like to, dig in with business owners and learn about their businesses so we can make sure that we keep them as protected as possible. And then we have a very robust E&O insurance practice. So errors and omissions insurance is what protects professionals and consultants and advisors, anyone who uses their professional knowledge, experience, or expertise to advise or to guide others. For example, realtors need E&O insurance in case something unfortunate happens in their transaction, keep them protected.
That's good to know. And, just for anybody listening, you also write policies outside of California as well?
Yep. Greystone's licensed in 8 states, mostly Western states. We do it as a service. to our clients who might have secondary homes in other states or other types of risks that just need to be protected.
Nice. Okay. So pretty much a one-stop shop for anyone looking for insurance, not home and auto, not auto insurance though, right?
Yeah,
Or
home and
you
auto,
probably could do.
absolutely, all day long.
Okay, cool. Sweet. But for the sake of the podcast, we want to talk about, residential uh homeowners insurance here in the Bay Area. And um, with a lot of agencies pulling out of California, how has the landscape changed in the Bay Area specifically in recent years?
Well, I mean, the thing that most people are keyed in on is cost, and premiums have certainly gone up. There's a number of reasons why premiums are going up. Climate change certainly is an impact on that, and during the pandemic, the insurance commissioner pretty much stopped approving rate increases, which created a problem. And then, at that same time, the cost to repair homes, for example, went up, and the climate was changing. I think 15 of the state's 20 largest wildfires on record have happened in the last 10 years or something like that.
Yeah.
And not to date this podcast, but there's three big ones going on down in the LA area right now. I don't think that
Yeah.
that the impact of those losses are going to be felt very quickly. I don't think the industry moves that fast, but I definitely think that there are going to be some wide-ranging implications as the insurance companies pay claims, as the reinsurance market gets hit to pay those claims. California Fair Plan, I think, is very much going to be tested. The California Fair Plan is the insurance that's available when other insurance options aren't available, for whatever reason. The most common reasons that we use the California Fair Plan is either if a home is in a brushy area where other companies just don't have an appetite for those areas, or if a home doesn't have updates where, if there's, for example, what's popular up here in Northern California, there's a lot of homes with knob and tube electrical systems still. And so we use the California Fair Plan to insure those homes.
Yeah, no, we run into that a lot, especially in the Bay, because a lot of homes are early 1900s. Do you know off the top of your head when knob and tube was, I don't know, like was not used anymore?
I think they stopped,
or was it?
they stopped installing knob and tube. I want to say in the 1940s, maybe 30s, 40s, maybe 50s. I think if a home was built in the 1950s or later, it shouldn't have been built with any knob and tube electrical.
Yeah, so just for any listeners, it's like any home that was pre 1940 that might not have your electrical updated, it's gonna cost you a premium for insurance. Is pretty much what Steven's saying. And then to lay on top of that, if you buy a house in a high fire area, which is a lot of the Bay Area, the only option is going to be what's called the California Fair Plan, right?
Depends on the area, but basically, the insurance companies that are still writing new business in California currently, there's two types of insurance companies. They're what we call the admitted insurance companies and the non-admitted insurance companies, or non-admitted are also called excess and surplus lines insurance. The admitted insurance companies are the ones that most people are familiar with. They're the ones that advertise on TV and in print. And they're what I call the vanilla insurance companies. They want nice, real easy risks right now. They used to have appetites for more variety of things, but for now, they really just want real nice, easy stuff. Newer or updated homes that are in the flats, where the likeliness that there's going to be a loss is pretty low. And then for homes that are maybe in the foothills or up higher into the hills, the non-admitted or the excess and surplus insurance companies are there. They just have a different appetite. They assume a little bit more risk, but they also charge for it. Those policies tend to be a lot more expensive. The coverage isn't as great. The homes will still be insured to value, but all the what I call the page 2 stuff isn't included. Everyone's really focused usually on what's on page 1, right? Coverage limits and premiums and deductibles. But in my opinion, it's the page 2 stuff that really separates the good policies from the great ones. And the admitted insurance companies are the ones that really have great policy forms where the page two stuff is very robust, and that gets lost with riskier policies. And then the third option is the California Fair Plan, and that's very limited coverage. Again, we're going to insure the home to value, but the California Fair Plan isn't designed to be complete coverage. So when we write California Fair Plan policies, we write a complementing policy called the difference in conditions policy. A lot of people call it a wrap. And the idea is that when you've got both of those policies working together, they're designed very specifically to very well mimic what would be found in a traditional homeowners insurance policy. So you're not losing coverage just because you're putting it together with two policies. Does that make sense?
Interesting. Yeah, yeah, and actually, I didn't know that the California Fair Plan wasn't great coverage. I thought it was for the amount that they charge people. I thought it was all encompassing.
Well, the reason they're charging that much is because they're taking on that risk. Think about it. If you're talking about homes that are in the Berkeley Hills or Piedmont or the Oakland Hills, as you get higher up there, the likeliness that there's going to be danger grows, and so the insurance companies are going to rate for that. They're going to charge for that. It makes sense.
Yeah, yeah. So, just I guess to take a step back and just like from a high level, if someone was looking to buy a house in one of those areas, what are the things that people should look for when purchasing an insurance policy?
That's a great question. So the thing that insurance companies right now are really focused on are the ages of the four major systems of the property. The four major systems are roof, plumbing, electrical, and heating. And insurance companies want those systems to be updated every 20 to 30-ish years or so. You know, what we observe quite regularly is that the roof and heating systems are more up to date than plumbing and electrical systems, because roof and heating systems aren't designed to last as long as plumbing and electrical systems. And so, if you're looking at homes with your agent, you want to try to be mindful of that. Try to get information, try to get some useful information about how old those systems are. It's not that we won't be able to get coverage if we don't have that information, but having good, complete information just gives us options. And so when you've got more options, then you have the ability to get a better policy and hopefully for a better premium.
Yeah, yeah. No, that makes sense. I've not to segue too much. I heard a horror story that insurance companies are flying drones over people's houses and they're getting canceled because the roof hasn't been updated in the last 20 years. Can you confirm or deny that's actually happening?
I think it's a little bit more specific than that. So we have clients that have received those letters, and what the method is true. The letter says that we've observed the top of your house, whether they're flying drones or looking at mapping maps online or something, and they say typically what it says is that they found either some pooling on the roof or they found some shingle degradation, and so. We've been successful at helping insurance companies get better information to maybe reconsider their decision. It's not a slam dunk, but if a home, if a roof is 10 years old or less, and it's well maintained, there shouldn't be any reason why an insurance company wouldn't want to insure that home, or they certainly shouldn't be canceling coverage for that reason if those conditions don't exist. So I think it's really important to have a relationship with a broker, with an independent broker. When you buy insurance from an insurance company directly, every person that you talk to at that insurance company is an agent or a representative of that insurance company. And the reason why I chose to become a broker is because I felt that there was an inherent conflict there, that no one was that maybe a fiduciary responsibility gets overlooked or isn't or doesn't exist. Brokers don't work for any insurance company. We're just the liaison between the insurance company and our clients. So we work for our clients, and we become their advocates when it's warranted, when it's needed.
Oh, 100%. And I've seen deals get really squirrely or not go through hinged on insurance. For instance, lenders require insurance policies to be underwritten before they can fund the loan. And if your insurance company is not getting back to you or doesn't have sufficient coverage for the house that you're trying to buy, like that can blow up a deal. So, I've witnessed this happen, and send everybody away because you do give great service. You know,
The I talk to a lot of realtors, and the advice that I give most often is, as soon as you get into contract, have a conversation. Have your client have a conversation with their insurance representative, right? Whether they're working with an
Mhm.
agent or a broker, it's really important to get started on the project on the process as soon as possible, because you don't know what underwriting is going to need, or how quick underwriting is happening, if there are market conditions that have slowed down underwriting. Um, and you don't want insurance to be the reason why your escrow doesn't close on time. But there was a time not that long ago, 10, 15 years ago, where insurance was an afterthought. We would get phone calls, the day before someone was closing escrow. Hey, we need insurance. And we would write up a proposal, and it was bindable, and we took care of it. Boom, boom, boom. And it was all over. And that just doesn't really happen anymore. I mean, it can happen under the right situation, but I certainly wouldn't want to rely on that. I would want to get ahead of this thing as quickly as possible. And that way, hopefully, you can have some options. You can make, a well-informed decision, a complete decision, rather than just grabbing the first offer that you get because you need to close tomorrow.
yeah, not scrambling to find just to get coverage. Um, well, while we're talking about it, I mean, if somebody's getting ready to reach out or buy a house, are there any like lesser known discounts for homeowners that they can take advantage of? I remember just to segue into my own personal journey. I remember I filed a renter's insurance claim and it ended up hitting me. I filed a renter's insurance claim because my bike got stolen, and it ended up hitting me on my insurance when I bought a house. So anything that you can share with the listeners to like be aware of?
Yeah, well, look, currently we're in a really hard insurance market, and so I think it's really important to be mindful of the claims that you might make. One of my paramount concerns, um, with my clients who qualify for preferred admitted insurance, is protecting their eligibility, because the alternative, like I said before, is more expensive coverage, and the coverage might not be as great. Um, you know, Generally speaking, filing smaller claims never really works out. You end up paying back whatever amount you got from the insurance company just by way of higher premiums.
Yeah,
And everyone's got their own sensibilities about how much what amount they should at what point does it make sense to file a claim. I believe, maybe I'm right, maybe I'm wrong, but I believe that in this really hard market, the real usefulness of an insurance policy is to protect you from financial ruin, right? And you know, um, no one wants to be out of pocket $10,000 for something that they believe that their insurance policy should cover. But if not filing that claim uh, doesn't create a financial burden, then I think ultimately it makes sense to try to not put that claim on the books. Not only will most claims affect your premium, some claims might even affect your eligibility. And then if you no longer qualify for that great insurance policy with those admitted carriers that are giving you all the great page two stuff, your insurance is going to get really expensive, and you're going to regret that you filed that claim. Um, Another reason to consider not filing smaller claims is because you never know when you're going to have a big one behind it. I remember I was working on a file a long time ago where someone was getting canceled, not because they filed a large smoke claim after some wildfires that we had down in the LA area, the Woolsey fires. But they were getting canceled because they had filed a smaller claim. I think within 2 years of that one, and their insurance company had guidelines that anyone that had filed two claims within 2 years was an automatic non-renewal.
that's crazy. Is there only option at that point the fair plan, or is
No,
it just become
not
increasing? Yeah,
necessarily. Depends on where the home is located. Depends on what the claims were. Depends on a lot of factors. Um, but when you work with a broker, that broker has more options available. So cast a wide net, talk to lots of insurance companies, talk to some other underwriters that have relationships with other insurance companies that we might not have direct access to, so that we
Yeah.
know that we're bringing you the best option available.
Nice. All right. That sparks another question. Like, say somebody bought their house for $1 million in 2019, and now their house is worth 1.4 million, and their coverage for that policy is written for up to 1 million, and there might be a gap, so to speak, right? Like, would you recommend? I've been telling people not to touch their insurance because for fear of getting canceled or not be able to get it back. Have you ever come across any stories like this or scenarios like that?
One of the basic tenets of insurance is to make you whole, right? And the insurance companies recognize that property values change over time. Now, it's important to be mindful that the value of a home, especially in California, is typically the value of the land plus the value of the improvements upon that land, which is usually a home or a detached structure or something else going on there, right? So,
Yeah.
for most parts of California, the dwelling limit on a home is going to be significantly less, or certainly less than what the street value of the whole property is, because it takes into account the land value. Um, and many policies that we write have what I call an inflation guard component to it, where the coverage limits increase year over year, so that over time you're not tragically underinsured because you haven't reviewed your coverage limits. But that doesn't account for increases in cost to build, right? And so I definitely think it's worth revisiting every, whatever makes you comfortable, whatever helps you sleep at night. If it's every 2 years, if it's every 5 years, whatever it is. I'm not sure that an insurance company is going to cancel a policy because you want to increase coverage. They'll either let you do it or they won't. And I think right now, given the billions of dollars in claims that insurance companies are going to be paying, because of these Southern California wildfires, I think that they would appreciate the opportunity to catch as much premium as they could.
Yeah. 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 On that note, are there any new developments in disaster coverage or like, especially with wildfires and earthquakes in California that you see coming down the pipeline or that you've seen enacted already?
Well, the insurance commissioner has recently adopted something that the insurance companies were lobbying for, and that is they want to use predictive weather modeling as a way to help set rates. So historically, the insurance companies were allowed to petition the Department of Insurance for rate increases based on losses, right? So they would say, look, last year we lost this much money, or we didn't make as much as we need to. And this is part of the justification for why we want to increase our rates. Other states allow for predictive modeling, where they're going, they're saying, we believe that over the next 3 or 5 or 10 years, whatever it is, that you know, the climate change is going to create these adverse weather events that's going to cost the industry however much money they're predicting, and we need to get ahead of it. We need to increase rates so that we have enough reserves on hand to pay those losses. So there's a new position created at the Department of Insurance. There's a scientist whose job is to work on those models to help the insurance commissioner work with the insurance companies for setting rates. And this is not unique. This happens in other states. It just wasn't happening in California yet. So now this is going to be happening in California, I think, starting in 2026.
Sorry if this is ignorant, but is that a good thing that they're doing that, or is that going to make policies go up? What's your, what's your take on how home insurance is going to evolve in the future?
Well, I think, you mentioned discounts and other ways to keep your premiums low. I think that, in addition to, some insurance companies offer discounts based on your industry or your occupation. Some offer discounts based on other affiliations. Some offer discounts when you've got centrally monitored burglar alarm and fire alarm. Home hardening credits exist. I think the evolution of that is that for some areas, home hardening is going to be required. Um, um, but those are some innovations, and I think that as California rebuilds these three communities that were really impacted by these wildfires, as those communities rebuild, they're going to be rebuilding with a much different lens, right? They're going to be looking to
Yeah.
put electrical power lines underground so that there isn't a concern about winds creating an electrical or a wildfire. They'll probably be building with more home hardening materials, and just being more aware of the way winds work and how fire works and how fire moves and things like that.
Yeah. Yeah, that's crazy. So I was just in Japan and had some friends like look at building a house there, and the houses there are all sold and they boast about how fire rated they are. It's crazy. Like we could probably take a page out of that playbook and make our houses fireproof, but for the time being that's just not the case. Knock wood. Um so any more advice that you can give to homeowners to ensure that they're adequately covered without overpaying and in a good place with their policies?
I think that what we think we know about the property and casualty insurance marketplace is going to be very rapidly changing. I
Yeah.
think that insurance companies are going to have different requirements for eligibility. I think that premiums are going to be increasing much greater than most people think will be reasonable. It's my understanding that there's an insurance company recently that received a 35% rate increase on their homeowners insurance program, and they are waiting for another 35% increase before they'll return to market. It's my understanding that part of the negotiation that the commissioner is having with these insurance companies is that in exchange for these very large rate increases, they're going to be required to take on capacity in areas that they weren't previously supporting. So there's going to be more insurance companies writing new policies in more areas, but the premiums are going to be really, really high compared to what we're used to paying. Um, I can very much foresee um, a time sooner than later where maybe the cost of insurance is a consideration for new home buyers, not unlike the cost of what property taxes are. For some homes, property insurance is more than property taxes, which is kind of crazy to consider.
That's unreal. Yeah, that's crazy. Well, that's going to be a fun gap to bridge, I guess you could
Just
say.
got to make more money.
Yeah, that's fair. Um, so do you think it's going to be harder for Bay Area homeowners to find affordable coverage? And is there anything that they should be aware of when looking for coverage in these high fire areas or fault zones, flood zones?
You know,
What else we got out here?
affordable is a subjective term, and so I think it's important to maybe be mindful of those subjectivities, right? Um, Rather than having a preconception of what you think insurance should cost, just do as much homework as you can. Engage, in as many. Um, I'm not necessarily saying you should broker shop. I think it's important to remember that not every insurance agent or every insurance broker works with every insurance company. So it probably makes sense to work with more than one. I'm not saying you should work with four or five. That seems excessive. But sort of check the expectations at the door. Just make
Yeah,
sure that you've done as much work as you can to know that whatever decision you're making is as good a decision as possible.
yeah. I mean, that's a great tip. And if you had to give another tip for homeowners to looking to lower their insurance costs or start shopping, what would it be?
I think the best way to decrease premiums without decreasing coverage is to increase the deductible, right? So the deductible is just your participation in a claim, right? And so
Yeah,
the more you want to participate in your losses, the less the insurance company is going to collect in premium. And so, for most homes, for most let's say homes up to 2,500 or 3,000 square feet in California, the sweet spot for what deductible for getting the best value out of your deductible is usually somewhere in the $2,500 to $5,000 range. So if you can stomach having a $5,000 deductible, property insurance deductible won't keep you up at night. It might be worth considering. What we notice consistently is that the higher you go up in deductible, the lower the decrease, the smaller the decrease in premium becomes. So at some point you have to figure out where that sweet spot is. And it's different for, different properties for different values for different insurance companies. But, for 90% of the policies that we write, I would say that sweet spot is somewhere in the $2,500 to $10,000 range, but a $10,000
Sure.
deductible is a big deductible. That means that any losses, smaller than, maybe $15,000 or $20,000, you probably wouldn't want to claim if you're only going to get, that less $10,000, right?
Yeah. No, that's great advice, man. So I guess the other tip would just be to reach out to you and you can like walk them through what the sweet spot is, right?
Absolutely. Yeah.
Cool.
Yeah. It's pretty seldom. It's pretty rare that we come across a property in California that we can't insure. So if you or your clients are having trouble placing insurance, we should be able to help.
Cool. Well, you're always my go-to man, and again, I really appreciate you being here. I know you got a lot on your plate these days, but appreciate you being a part of letting me be a part of the road show. And yeah, Stephen Klein for all your insurance needs, everyone. Um, Anything else you wanna share with the listeners of the House Blend?
Gosh, I think we've said it all.
I mean, this has been great. No, I really
I
appreciate it,
appreciate
man.
it.
This is great insight.
Yeah,
Yeah,
just be kind to one another. You never know what other people are going through.
touche. Amen to that. Amen to that. Um, well, cool, man. Thanks again for being here, and I'll drop a link in the chat for anyone who needs to get a hold of Stephen Klein for all your insurance needs. And tune in for the next one. We're going to be talking about phantom costs associated with real estate. Stephen, I think you covered a lot of those, so I really appreciate it.
Awesome.
But that's going to be the next episode in the affordability series. So until next time, everyone, thanks again.